The market is increasingly betting on a supersized Fed cut. Investors see a rate cut from the Federal Reserve as nailed on for next week, with the only question whether policymakers could go for a jumbo 50-point cut. Weak jobs data has bolstered that case, although watch out for US inflation numbers, with PPI due out today and CPI tomorrow. If inflation looks sticky, speculation about 50 basis points might fade. Francesco Pesole is an FX strategist at ING. Francesco, do you think 50 basis points is possible?
Well, it is possible, but only if really inflation data come in quite on the weak side, which is not what we expect. We don't think that today's PPI or tomorrow's CPI will really sort of cause huge concerns in terms of the inflationary impact of tariffs. But at the same time, it should just cement the view that the Fed will start with 25 basis points. We have been calling for 3 cuts this year. So I think latest news on the jobs has sort of like pointed towards that direction, that the Fed can cut 3 times. But for the moment, I don't think that the Fed will cut by 50.
So you're calling for 3 cuts this year, but do you think policymakers will agree with one another?
Yeah, I think there's a much higher risk now that we will see an increasingly divided Fed. I believe that the risk there is both that some members might want to align with Trump's view for lower rates, and some other members that perhaps could think that there is still a good case for lower rates might want to take the opposite view to sort of preserve the Federal Reserve's independence. So I think we'll see a lot in the next few months about sort of this divide within the FOMC, but ultimately data will determine in our view, what will happen. And we think that with the jobs market deterioration, there's still a strong case for sort of cutting 3 times this year.
We've seen a firmer dollar lately after the dollar index lost about 10% year to date. Are we seeing a move back towards dollar dominance, or was the idea that it was reducing always exaggerated?
No, so I think these are mostly sort of short-term corrections, which are normal in an environment where markets is still extensively short the dollar. And obviously, a lot of negative news have been priced in. The dollar is still trading with a risk premium relative to its rate differentials when we look at sort of 1 year or 2 years of data. So I think that this is normal. We have been dollar bears, but we never thought that it would be sort of one straight line in terms of higher euro dollar. We thought it would always be some bumps here and there and some positioning adjustments. I think this is completely normal, but I think the direction of travel remains higher for euro dollar.
Well, in Europe, the ECB sets rates tomorrow, but nobody expects a move this week. Have they now reached the end of their cutting cycle?
Yeah, we believe they probably have. There is still probably an open discussion on whether there will be another cut later this year or at the beginning of 2026. Much will depend, obviously, of how the activity picture looks alongside the inflation one. But I think as things stand now, and based on what the ECB has been saying, they've been quite vocal, really, both Lagarde and other governing council members, they feel like they are in a good place when it comes to inflation. So for now, I think it's quite realistic that they will keep rates unchanged for the foreseeable future.
Could political instability in France, where the government collapsed this week, start to hit the euro?
So the way the euro reacts to these events is generally in very brief spikes of sort of correlation. When markets feel that the sell-off in a certain bond market within the Eurozone is sort of a little bit out of control. And that's when sort of the euro gets hit. We saw it when the no confidence vote was announced, that we saw the euro trading a bit weaker. This week, the euro seemed to be trading fine. Now it's a bit under pressure. I think it's not enough, in our view at least, to justify a complete change in direction in euro dollar, which in our view again remains bullish. And we must always remember that the ECB probably stands ready to intervene in different ways to sort of support a bond market the French bond market should it turn into an uncontrolled sell-off.
That was Francesco Pesole of ING. Don't forget, you can watch more videos on Reuters.com.